After Donald Trump's tariff shocks last month, bets on a slowdown in the global economy increased, prompting oil prices to fall by over 20%. More recently, optimism surrounding trade deals has lifted the prices from these lows. But with OPEC Plus boosting output, can the April lows hold? I'm Fiona Cincotta at StoneX. To unpack this and more, I'm joined by Director of Market Strategy Energy, Alex Hodes. Thank you for joining us, Alex.
Thank you for having me, Fiona.
So it's been a volatile time for oil amid Donald Trump's tariffs and OPEC Plus decision to boost output. Now, WTI and Brent have recovered somewhat, but concerns about oil market surplus keep growing. Could we envisage WTI and Brent falling below those April lows?
You know, I think there has been kind of a support at those April lows. So we're seeing a support around that 55.50 for WTI. It was kind of a 1-2 punch with the tariff concerns. In addition, OPEC just kind of piled on there. And I think that's overwhelmingly pushing the oil market down or providing some more fears in the oil market. And mostly because it's almost a strategic shift of where OPEC has been throughout the past several years. So OPEC has really been a support of the oil market overall. And they've almost been kind of provided a floor to the market, because whenever prices were kind of dropping below those levels, OPEC would come in and kind of support the market. So that change in their strategy or their direction is really prompting some more fears. And then obviously there are a lot of concerns over oil demand and whether we're going to see the economy slow. I think those are slightly overstated. I believe the most recent estimates were around 400,000 barrels per day. And so just to put that into perspective, that's less than 1% of global oil demand. So I do see a slowdown in the economy, but whether that really kind of is the punch that knocked WTI and Brent 20%, I think it's more about OPEC.
Okay, and then what about US oil production? With the recent drop in oil prices, how will US oil production fare, do you think? And I guess what challenges does the industry face, and what will the effect be on global oil markets?
So the US has recently come out with, there was a survey from the Dallas Fed Energy Survey, and a break-even price for new crude oil production was around $65, and that is a WTI price. So I think we were already nearing that level prior to this recent price drop. So I think U.S. oil production is still expected to grow somewhat, but our forecasts for U.S. oil production have moved to almost flat for the year. Comparing that to the previous several years, we've seen almost 1 million barrels per day of growth from 23 to 24, from 22 to 23, and then 23 to 24, it was lower than that. So we've already seen kind of this aggressive growth start to plateau, and I think we're going to see even further plateauing and perhaps even a flat year from 24 to 25. They're running into issues regarding infrastructure, hauling off associated natural gas, because there's kind of infrastructure blockages there as well. And with prices below that $60 per barrel, we are going to start to see production fall. And we are already seeing some headlines from some of the major players in the Permian Basin, which has been the source of energy growth over the past several years, are coming out and stating that they don't anticipate any growth, and capital expenditures are going to be reduced there. So I do think that is supportive of the oil market. So any prolonged time below that $60 per barrel, we're going to start seeing more and more barrels come offline from the U.S. And the U.S. has really been a source of growth of production supply over the past several years.
Okay, and the US doesn't export much of its crude oil or gas to China, but it's a different story when it comes to propane and ethane. US exports around 80% of the propane it produces, of which 20% goes to China. And as for ethane, it's about 50% of total exports that go to China. The current trade crisis creates a major challenge for this sector. Can you share your views on that? And what does it mean for the US side? And can they find other customers?
Yeah, so in my opinion, this is the biggest story regarding the trade escalation between China and the U.S. regarding the petroleum sector, and it's more focused heavily on that LPG and ethane level or trade between those two countries. We've recently seen Beijing actually come out and put a tariff exemption on ethane imports. So when the ethane trade between the two countries, because it's such a large driver of exports from the U.S., and China actually imports all of its ethane from the U.S., a lot of the petrochemical sector in China is under tremendous amounts of stress, and they would not be able to actually run or operate if they were not able to import ethane. Propane, we're already starting to see some cracks there as well. So as of April, U.S. propane exports to China fell by 350,000 barrels per day. And that's almost the entire trade between the two nations. So although this trade should continue from the U.S., there should be barrels of propane flowing outside of the U.S., they will have to find a different home than China. And China has really been a huge area of growth in the propane market demand side. They have built out a substantial amount of propane dehydrogenation plants, which convert that propane into petrochemicals to be used in plastics. So the U.S. will continue to export, but we're going to see China start throttling down its petrochemical sectors, because as these propane prices are moving up for them, then it's going to hamper their margins. And so they're going to have to throttle their rates down to kind of compensate for that. And we're already seeing that. So propane dehydrogenation plants in China have dropped from 69% rates down to 60 as soon as the tariffs kicked in. So even though China is able to kind of replace some of the barrels with Saudi or Middle Eastern propane, they're going to get that at an extremely higher price. And so it's going to eat into their margins. And ultimately, that's going to be a demand drop of propane. The estimates are around 250,000 barrels per day. And they kind of range between what each data agency is reporting. But that's really going to be a big drop in demand for the propane sector.
Excellent. Well, thank you very much for your analysis there, Alex.
Thank you very much.
For more videos like this, please do like and subscribe.